Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Friday, October 3rd, 2025. As most of you know from my prior weeks, I'm dividing it up into two pieces. I try and get as early as I can on Friday out some of my market thoughts. We'll look at some industry sectors and a few stocks. But the first video is mostly about the markets and what I think is going on. And I'll indicate why I actually bought some contra ETFs today. We'll see if I was wrong. Hope I'm wrong because I bought insurance and I do better if the market goes higher. But I think more things to be concerned about. As I titled today, does the midday sell-off suggest the markets are ready to fall off the wall of worry? Again, my name is Dr. Jeffrey Scott. I am Market MRI Pro at gmail.com. My Google group is Top Down Trader. My early version of my website is called marketmripro.com. As always, this is for educational purposes only. Anything we recommend should be taken in the spirit of education and not investment advice. I do these videos to demonstrate make, how I do my top-down analysis using my tools and how I use it to um, create value for my family. And without going into numbers, earlier this week I showed you my third quarter performance and how I've done off the April low. I trade equity and equity options, and I hold them between swing and position trade. Um, and for options, I'll roll them up and out if I want longer duration of holding them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I'm so happy that and proud that I'll be having an add-on for Metastock coming out shortly. Look for that announcement. Daily market analysis using wealth charts. I do this now on Mondays only, as I've been doing too many videos on YouTube to have the time for more. I will have one out after the weekend on stocksanddocs.com. If you like what I'm doing, whether you own my tools or not, it's irrelevant. I'll be doing a stocks and markets review live tomorrow morning at 10 a.m. Eastern Standard Time. If you go below the video in the YouTube area, or if you're on the Top Down Trader group, you'll see a link to register in Zoom, and I will send out videos to those that register. Also, getting in the last home stretch for the Florida meeting. I'm going to try and do these annually again. I did them for a while. I've gotten so busy at work. I've been doing just the June meeting, but the June meeting, I'm only about 25, 30% of the presentations. And I kind of like having more time to really go in depth and show you what I do and what works for me. So 2 days live trading, coaching, and education, October 26th and 27th in Palm Beach, Florida at the Marriott Palm Beach Gardens. Cost is $12.50. I will feed you breakfast, lunch, and dinner on Sunday. Breakfast and lunch on Monday. I'll have coffee, sodas available throughout the day, as well as snacks. Hotels $155 a night. You just register, email me, and I'll give you the code. If you've registered using Stripe and you haven't heard from me, please just email me. I don't always get notification. And we'll have extra fun Sunday night, weather permitting. We'll take my boat out for a dinner cruise. Other things, John Person has a seminar that weekend as all. It's a separate thing, separate hotel, separate fee. But you could come in Thursday and go to his Friday and Saturday and mine Sunday and Monday. If you purchase mine for $12.50, you will get a $400 rebate towards any of my tools. You could even buy the tools before the meeting. Once you paid, you generate that rebate opportunity. If you've already got my tools, hey, that's even better. You can use it for the meeting next year. And what will I teach you? How the foundation is the tools from the masters I've learned in over 30 years of trading markets. We'll talk about how to master a top-down approach, how to use options to multiply your performance, money management skills. I think money management may be the most important part of the trading, and frankly, it's often the part we forget to talk about enough. So money management remains, incredibly important. And then some of the special sauce. I'm going to show you a unique way. I don't know anybody else except for the one that showed me 20 years ago, Chris Wilson, that uses relative strength this way. but I'll show you how I use relative strength to give me insight into what's working now and something that I think complements the traditional ways of using relative strength. And then how to master the tools, whether it's my tools in TradeStation, the app, TradingView, or HGSI, or other tools that you use. And so I look forward to it. Um, Lots of talks by me, and I always get the same audience, which is either means, well, I don't know what it means, except they must like it. I'd love to see some more people attend. I close the room at 12 so I can give individualized attention, and so I don't have too many people on the boat. And again, love to see you. Just go sign up and let me know, or send me an email for more information. How do I join the Google group? You just go to all groups, look for Top Down Trader, and let us know how you want to be contacted. Why join? I'll get you extra $100 off my tools. And more importantly, it's how I contact people. It's my mailing list. And every night I put out a little video of what I think is going on in the market. Is there a recession in our near future? Nothing's changed since last week. It looks like they're still reporting the data, even though the data from the government's been shut down. The Fed may have their own budget for all I know. Certainly enough Fed speakers next week. Why do I even look at this? Because one day I'm going to come on here and say something has changed. And I think this market is in great shape. I do think a small pullback is in order, and maybe that started today at lunchtime. But when I say small pullback, I don't see more than 5 or 6%. If, however, we were in a recession or we go into a recession, I recognize that bear markets and bad markets can be much, 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 much worse if we have a recession. Not yet. Know your news and earnings on the left. Each one of those arrows suggests that there's a Fed speaker. One of the arrows shows that on Wednesday we get the minutes of the Fed meeting from September. With all the Fed speakers we have, I doubt there's a whole lot of surprises there. We've got some question marks whether we'll see the trade deficit, jobless claims, and sentiment. Some of it we'll see, some of it we won't see. So probably be more what we don't see this coming week than the data that comes out. How long does the market ignore and move without having clear cut of what's going on with the labor and other things that we're not going to see? On the right hand side, you can see that there's a modest amount of earnings this coming week. Um, but when you see Delta, it tells you the next period is coming. So there are earnings, not a lot, but it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. All right, on to the charts. Hope to see people in Florida. I chose a hotel that no one will get mad at for the price to stay there. But if you bring your loved one and you want to stay on the beach, it's 10 minutes away. This is called the Singer Island Marriott Resort. I used to live on that island a couple doors down. It's a great beach, as long as it's not raining. But that's a great place to stay if you want to bring family. And those that have been here know that PGA, which you just stay on it, it turns right and you get to the hotel. But PGA is the location for every major high-end store, restaurant, big box store. It's sort of where we live our life is on PGA. All right, if we go into the app, let's go to market breadth. So the first thing is Bitcoin continues its torrid week, finishing above the midline for the day, up 1.5, but up 12.71 over the last 5 days. Is this a risk asset going up because of concerns about the economy and the market with the lack of information? Could be. Could be like gold. Russell's up 0.75, the diamonds 0.52, the spiders were flat today, and the Qs led to the downside as we saw some of the mag stocks sell off. They were down 0.42. Now, one thing that I was disappointed by as you look at where they were in the range, they all finished in the lower part. So this was a weaker day than it felt. They had more stocks up than down, which is a switch from the last couple of days, but certainly at the index level, it wasn't perfect. Um, VIX was down as well, and the dollar was down a bit. On the new high, new low front, we're getting the absence of new lows. That's pretty bullish. The new highs minus new lows still getting into that triple digit area. That's nice to see. One thing I always recognize is new highs in markets and higher highs are built on new highs at stocks, not new lows. If we look at the breadth, you could see in the color versus the gray, more sectors were up, more industry groups were up, and 65% of the S&P 1500 were up, 58% of the NASDAQ, and 63 of the NYSE. That's about 15 points more than it was any other day this week. So that's an improving breadth day. If we look at what was working, healthcare remains the leader, up 1.16, up 6.88 this week. Utilities 1.16, followed by financials. What was weak, discretionary and technology led to the downside, also communication. So at least for today, rotation into small caps and value, the resurgence of healthcare, and probably more important than anything else in this entire world is Taylor Swift released a new album. If you look at themes that we're working today, copper again was up, leading clean tech, robots, genomics and biotech, oil producers, more biotech, renewable energy, metals and mining, and interesting construction. That's not one you would have necessarily expect, robots and whatnot. So you look at it here, it kind of looks like a quiet day in the market, not much movement in the indexes, and more than half the stocks trading higher. If we look at our timing model, I would expect no change, and you get no change. The bongos are blue, the stocks are above the WMA, and therefore the buy sell on the bottom of each of these in the daily chart is green, is a buy, and the dailies will switch long before the weeklies. So the weeklies are also a buy, as you could see here. And if we just look at these weeklies, because they're pretty clear, there's not much on the chart. You can see the spider closed above where it opened the week. Technically a high closed doji, but that only really occurs in a downtrend. Closing off the all-time highs, but setting an all-time high, all-time closing high. Ditto on the Qs, all-time high, all-time closing high. The Russell setting an all-time new closing high on this week, but finishing off that highs, and the same on the diamonds. So you might ask, why would anybody be so stupid to actually buy some contras today? Well, I'm coming with that. Um, and to start with, as I explained that, I am very long right now. I still have some cash, but considering the number of trades I've got on and the bullish option spreads that I have on, I'm a little bit extended. And um, I've had a great year. I'm not a braggart. I show it because, people don't know who I am. They think, who is this guy? He's been talking for 25 years, but for all we know, we have no idea what he does. Why would he even do this? And so this year I have shared my model portfolio. It was up this week at lunchtime. I'm sitting there around 12 o'clock and I looked at it. I said, I'm up 10% again this week. I think it's time to buy some insurance. And, I know what 10% is on my portfolio. So I figured I'd spend $15,000 on insurance, and I bought some options on triple Qs puts. Um, I bought some diamond puts, and I bought some TNA puts. Why did I buy puts on the long instrument instead of calls on the short? I just like to buy whichever is more expensive, and some of the short ETFs are kind of cheap, and I'd rather buy the more expensive one. They move more, in my opinion. Although technically they probably move the same if I have the equal number of dollars at risk. So what worried me today? Let's start by looking at what we got. The positive, continue this beautiful uptrend. If we believe in cycles, we go up, we pull back, up, back. Well, this is a reversal candle. Big topping tie, closed below the open. It's not a horrible candle. Seasonality is fine, but why won't we pull back to the 17? Why not even in the 50? So that's my worst case scenario. Obviously, it could go lower. I just don't think it will. So I bought some protection. I didn't buy short or long the spiders, and I may reevaluate this coming week, but I did take a position in TQQQ, which is just a leverage of this chart. Why? Same thing, great pattern going up. But if we look at what happened this week, you had sort of a failure at a new high, and we opened below that failure and traded lower today. I thought that was kind of bearish looking, and I thought this would be one of the markets I wanted to short. Now, again, I am not anywhere near net short. I have built a number of those ETF spreads so that if the market falls 5 to 10%, I can mitigate a large percentage of my risk. If the market goes up, I'll probably cover those short positions or those contra positions very quickly in the week. We've had some pretty horrific Monday opens in October's over the years. Friday was good to a point. We will have more failures of Congress likely to settle on a budget. The rhetoric will go up, and I'll show you what happened at 12 o'clock of why I made that decision. If we look at the diamonds, I'm not going to blow it up. Beautiful move, but look, a topping tail. Now, that doesn't mean it's going down, but it's a negative candle, even though it's a positive day. On the Russell, a breakout to all-time high and a reversal with a topping candle. So each of these have a reason for me to be a little bit concerned. When you look at the diamonds, what is the high-low jump? That's only 83.91. So the high-low jump's not an issue, even though it looks close. The VIX today was, let's get the VIX here. It was up 0.30, not much of a move. Certainly looks like it's putting in kind of a rounded bottom, whatever that would mean, and the dollar was kind of flat. So let's make this a 5-minute chart. It'll take a second to load. Well, that was a quick second. Look at what happened at 12 o'clock. So I just happened to be, that's the 2 o'clock one, my bad. Here's the 12 o'clock. I'm eating lunch and I'm noticing a lot of reversals in stocks. I hadn't even looked at the charts because I was in my kitchen with my phone. And I said, that's when I thought a little bit exposed and that I would buy some protection. So as I said, I bought puts on TQQQ, puts on diamonds, and puts on the TNA. And I bought enough to weather a 5 to 7%, maybe a little bit more of a downtrend. I'm in enough things that don't correlate with stocks like gold, even uranium isn't correlating, that I could weather a storm. But I just wanted to protect. And I brought it with 2 days, 2 weeks of duration. Why? Because I'd be happy if today was the middle of the month and we closed everything on my option positions. So I want to cement in for the same time frame because I will probably sell off significant things over the next week and certainly at options expiration if the market shows any trouble. You could also see that as the market here is selling off, the VIX was spiking, but just like the market, the VIX did come back some, but you know, and then it sold off at the end of the day. So don't know what's going to happen. I thought that that was enough concerning for me to buy a little protection. I will tell you it's the worst thing I do. Worst thing I'm good at is knowing when to buy the protection. Um, you saw my returns for this year. They are outstanding, but this is the third time I was nervous and protected my portfolio, and it'll cost me $15,000 if I'm wrong. I hope I'm wrong because I've got a lot more than $15,000 to the long side. So I buy healthcare insurance. I buy life insurance. I buy car insurance. I never want to use those. And I bought insurance on my portfolio today, something we'll talk about at the live meeting. If we go and we look at commodities, You could see gold and silver both rebounded after negative days this week, zero point 0.8 on at least negative day on Thursday, up zero point 0.8 on gold 2.33 on silver. They are both near multi-year or all-time highs. Silver, as I showed, I think yesterday, you got to go back to 2011. Oil has dropped below the 200, and the natural gas, which broke above the 50, is heading back that way. Something to watch, not something I'm taking any action on. And then, want bad news? The 10-year was up 0.71. The 30-year was up 1.38. They're still very low in their patterns. If it gets to 5.0, I'm probably out of the market. That seems to me to have been a place that the market sells off every time. We look at the buckets. They were interesting today. I can't show you because it's I can't open it when I'm using Snagit. I took a picture around 2 o'clock because even with the market selling off, the buckets on the Nasdaq were 15% above, meaning 15% or so of the stocks were above their Bollinger Bands. That's getting close to a reversal. But as the market sold off, it did reverse. So I look at this pattern and say it's interesting, but we got buildups at the bottom of the Bollinger Bands. We got buildups at the top, and I'm going to call this neutral. The market breadth tool, NYSE on the left, NASDAQ on the right. You see the NYSE opened up at all-time highs, traded to all-time highs, closed at all-time highs today, but closed well off the high of the day. Volume, let me check my trusty tool here at Market Surge, formerly known as Market Smith. I like to use that to get the volume. So what we see is on the NASDAQ, volume was up 9%, up 5% at NYSE. As I mentioned yesterday, yesterday was the holiest day in the Jewish calendar. The days actually start the night before, so it was Wednesday night and Thursday. Um, there's the old adage, you sell Rosh Hashanah and buy Yom Kippur. Yesterday was Yom Kippur. We had a super strong day. I suspect we'll see more volume next week as those traders who were home for the Jewish holidays come back to work on Wall Street. But volume was up a little bit today, nothing massive. And what I thought was interesting is we actually added a distribution day on the NASDAQ. So we're at 5, and we dropped one according to Market Smith on the S&P 500 where we're at 3. Why is that important? Because distribution days add up, they lead to markets pulling back. So that's still something to watch and something to be concerned about. So volume, nothing special today. Is that a reversal candle? Well, you can see other days with topping tails. Hard to say anything. If we had less of a body, I'd be more concerned. Stocks above the various moving averages actually trended up. That's been a divergence. New high, new lows, advanced decline, and up-down volume is high, is positive. And we did get a bango, an excessive exuberant buying day today. On the NASDAQ composite, it set the all-time high and closing high yesterday. Today it opened at the prior highs and then sold off. Still saw improvement in the stocks above the moving averages and with a good new high, new lows, advanced decline and up down volume, and they had their bango as well. So no signal there to be concerned. If I go to my larger market breadth tool, I'll show you the kind of things that worry me. I want to make sure that's 1 day and daily chart, and I want to go, let's say, I want to go 150. So the thing that bothers me is each of these stocks are within a day or two of their all-time highs. Yet look at the AD lines on the NASDAQ and on the Russell. Yes, they're turning up, but they're still lower. Notice that the overall trend in the stocks above the various moving averages, the new highs, dropped on everything but the spiders, and the NASDAQ turned up. And then one thing that shows strength in the market and perhaps some more concerns, if you look at the 13-week new high, new lows, we're at the upper, getting up there, 88%, 84%, 86, and 89. Does it give me a signal? When it gets to 95, it's a signal, and it moved up a lot in the markets on Friday. So what does this tell me? More reasons to be concerned. This is that wall of worry. We've got the Fed, which is behind the eight ball. We've got employment that's horrible. We've got a lockout because we don't have a budget to pay for things. So a lot of the reports we're used to are not going to happen. There's a lot of things going on. So I called my performance today where I was actually up, climbing a wall of worry. But I think we're at a point where um, we might be going the other way. But I don't think we'll get a big pullback. If I look at the ratio charts, which give me a sense of what's working, technology weaker today, but strong over the intermediate time. Communication starting to sell off. That's a change. Healthcare really looks good. Utilities are trying, especially the electrical generators. And then you can see Bitcoin, which has had a massive week. So not huge leadership there. So that concludes my first part of the top down, the markets, and a high level view of the sectors. The next thing I want to do is go into industry groups. And how I do that in my product is I start with this list, which I call the JAS Impulse List, which includes all the stocks in the NYSE, the NASDAQ, and the Amex, and I pre-filter them for $1 and 100,000 shares. I then have 31 stocks this weekend. If I go to the top-down view and I look at all the stocks and sectors, I have 3,831 stocks. So all the stocks make it into a sector. So it's very different than the S&P 500, the S&P 1500. It's it's a much broader market view. So on a day like today, where the broad market probably did better than the indices, they may look stronger than the S&P 500. When it's a big caps rule day, they will clearly look weaker. If I rank them by percentage return, we can see healthcare, financial services, and utilities were the top three based upon my model. If we look over here at industry groups, we have all the industry groups here, but they're only going to be populated with the ones that are in these three groups. So let's take the top 10. 1, 2, 3, 4. Uh-oh, I got a visitor. 5, 6, 7, 8, 9, and 10. That was my now 4-year-old granddaughter who's celebrating her birthday today saying goodnight. I'll tell you, there's no bull market better than a grandkid. I say that as a guy who wasn't the happiest with children because if you got him, there's a reason why it's illegal to kill them, but you love them. But you get grief from time to time from kids. There's only greatness from grandkids, especially at her age. All right, so I've highlighted, sorry for the distraction, the top 10 industry groups. That gives me 259 stocks. Now, I could look at all of them, but I don't want to do that. I've got 3 or 4 main ways of filtering. One way is I'm going to start with by filtering out $5 and 500,000. I don't want stocks less than 5 or less than 500,000 shares. And now I've got 126. Now I could look at all those, but I don't want to. I can rank them by short, intermediate, or longer intermediate momentum. So Humana started moving. What a brilliant day today. There had to have been news in the healthcare sector. Maybe the Medicare Advantage rates were better. Um, Medicare plan ratings, yeah, that came out yesterday. So um, if their ratings are higher, if the rates go up, they make more revenue. So not a surprise. UCFI kind of looks like it's probably an IPO. So we'll keep going. Cigna, like Humana, a managed care company, a nice breakout. Now, these things have been troubled this year, but they are earnings machines. All right. And this is the killer. They had a bad first quarter, um, and the whole sector sold off. They've had positive revenue surprises. It has a 2% dividend, trades at a multiple of 10. There's was some integration. They bought a PBM called Express Scripts. So they're more than just a payer. Who's the next one? Elevance, one of my customers. So I'd be careful what I say. But after the sell off back, well, much before that, here's a stock that back in September last year was trading at 563, traded into the 200s, and now it's had a nice rebound, still below the 200-day moving average. United Health, another one, similar story and chart pattern if we looked at it, making its way higher. So clearly the managed care companies. Now, do I own any of them? I do own one of them, and didn't do as well today. And that probably is because they don't have as much MA business, perhaps. I don't know that. I believe they sold their MA business to a Blues program. And but selling their MA business made their stock look very different than their peers, and that's CVS. And they were actually, were they up? They're up a tad, but that's a reversal candle. I actually got into them down there. Um, Kind of when Buffett bought into United, I said, well, I'll buy something else. And then we could look at ISRG. This is a robotics healthcare company. Massive sell off, probably a good time to buy if you like buying fallen angels. Now I could look at different time frames for that. I could look at percent movement today. The problem with that one is I don't really care about a stock that was up 480% today. That was this one because how do I buy that? Now Oscar is one that I've owned in the past, is another one of these healthcare plans. And this one had a nice break today. That one looks interesting. And it's getting back to where it was back here. So you got to worry about the double, triple top action. Tandem, a diabetes monitoring company. This is probably my best play of all time, if you, especially if you consider only things that I publicly presented before I bought it. It ran from $4 to like 160. Talk about timing. And it's been dead for quite some time, and it still looks pretty dead, but it's got the double momentum signal here, these two dots coming out of a squeeze. The separation relative strength at OBV, this one might be worth a flyer. It doesn't make money. It does have some revenue. Um, its PE is going to be negative because it doesn't make money. One of my favorite things to do with this list, though, is to add a pullback and uptrend, make the list even smaller, and that takes it down to 30. Rank them by bullish impulses. My impulses are momentum, breakout, volume, gap, and my CPR signal. So here's Humana, which will have multiple of the blue dots, volume, breakup, momentum, and a CPR. Could you buy Humana here? Why not? Just broke above the 50. I might wait to take out that yellow line, which is the chandelier stop, which I sometimes use as a buy-sell filter. It is not extended, and look at the volume and look at the relative strength versus the moving average in the OBV. I think Humana looks really good here. IART will have three dots. Integra Life Sciences Holdings, don't know much about them. PHG, Phillips kind of going sideways. There's Oscar, which may be the best of the bunch. Medtronic breaking out here. Nice line up, breaking out. CNP, I know I looked at this one earlier. Canadian National Pacific Railroads. I think it's railroads. Nope, I'm sorry. CenterPoint Energy. Um, it was up nicely off of the 50. Didn't have a whole lot of signals. So that is how I do top down. But I'm a sucker for bottoms up. And in the bottoms up world, and my stock review on Friday night is very simple. I go much detail on the Sunday video after I had a chance to look at 1,000 different stocks and give you the benefit of me spending that time. What I like to do is I like to set my favorite filter. And this has been my money shot for this year. I set my filters at $5, 500,000 shares. I like it to be above the 200, and I'm looking for a 2-day momentum up. Special signal. These are the stocks that hit. So ADNT, you're going to see 2 dots here. The perfect is with the squeeze and the relative strength in OBV fanning out like that. Sideways move and a breakout. Earnings per share growth the last couple times was great. 48's not a win. It's versus 68, 357 versus 356. So not a lot of growth. I do like the fact that it's trading right above the 50. And if we look at the high-low jump, it's not extended. ALV, Auto Live, again, a nice base trying to break out here from a squeeze. Axle, another automobile parts company. CP, here's your Canadian Pacific. And I like this one. I like things that break above trend lines. In fact, I was looking to buy this one today, and I didn't buy it because I got concerned about the market. This one pays a little dividend, 0.7%. It's pretty steady on the earnings. It's going to have 85 versus 71, 270 versus 261, so a little bit of growth. Oversold. I like this one. It's a merger of Canadian Pacific and Kansas City railroads. I like the breakout, and I love the 2 dots with the constellation of signals there. Herb. Don't know this. Real estate properties, doesn't pay much of a dividend. I'm bored by that one. FIGR is early on. I don't usually put IPOs on with this signal. JHG, Janus Henderson Group Financial Services, had a nice person buy signal, which is not part of my tools. It's an add-on off the 50 on Thursday and moved up on Friday. Here is one that I did chase today. I looked at it last night. No, I don't mention every stock that looks good. And when I realized what they did, I set a buy stop above the high of the day, and that's kind of where it opened. And I filled. KULR makes a new generation of battery technology for the UVs that are flying around and the autonomous vehicles. Imagine the power if you could have one whose battery life lasts considerably longer. So I thought that was a good story. It does not make money. It doesn't pay a dividend. PE is not bad, minus 8%, minus 8.5 rather. So I thought this looked good. Why? I love the volume story. Even early on, it had volume. I love trendline breakouts. I love 50-day breakouts, which is what it took off from. And it had these 2 double momentums. It had double breakouts and double volume, but the one that historically has done best by me is these double momentums coming out of a squeeze. And I love the fact that RS was breaking out, as was OBV. And what I also know is that because right here it says my weekly RS was breaking out too, that when I look at a weekly chart, come on, when we look at the weekly chart, you could see the same thing, the relative strength breaking over. In fact, even though I'm looking mostly at the daily crosses, what I learned from Chris, the guy that taught this to me at an HDSI meeting in Palos Verdes States, 2010 circa, the weekly is the powerful one. And that you see very little, you see very few major uptrends when that is not above its moving average. So that is this one. So I'm buying the story, kind of a meme stock. I'm buying the pattern. I recognize it doesn't have any earnings. Mankind used to be involved in diabetes research and new drugs. Big gap ups, um, a base. It looks like a takeout. I don't know if it's a takeout, so I go in here, and the minute I see investor alert, I know it's a takeout, and I'm not interested. No matter what people sell it for, there's always some lawyer that brings lawsuits because they didn't get enough money. And lastly would be Travelers. company, and that looks interesting. You got a nice uptrend, a breakout 1.73. It's not going to be a big earnings generator or earnings grower, but what you have is a industry in insurance that does well when the markets themselves are having challenges. So, summarize my thoughts for the night, for the weekend. I think the market's in a little bit of risk here. Um, that sell off that started at noon might just be a shot across the bow and the bull keeps going. But with the divergences we've seen, I think a 3 to 5% pullback here down to the 50 and a bounce at the end of the month into the last 2 months of the year, which are the most bullish. Not only would that be healthy, I think that would set us up for a fantastic year-end rally. However, we may not need that. We may rally anyways into year-end, especially knowing that the recession's not here yet, and we should have some rate cuts to help propel us. Have an awesome weekend, and if you're free at 10 o'clock in the morning Eastern Time or 7 a.m. out west, why don't you think about joining me at my webinar? And like I said, I will, oh, I do that all the time. Got to close that thing. It's designed to stay on top. So let me close it. We go back here. And just to remind you, at tomorrow morning, 10 o'clock, we're going to have a really nice 2 hour session. It'll be whatever you want, but I'm going to walk through my market review slowly, show you where the tools are, and hopefully we'll all get something out of it. And we'll see you probably Sunday evening with a broader view of stocks, and we'll see if anything else pops up. Have a great one. Thank you. And thanks for joining me. Hit subscribe, hit the alarm, join Top Down Trader, and we'll see you soon.